Like, these people know what decision they've made already. Do you know what I mean? And if it was going to be approved, I believe that they would have done so already. They don't have to always leave things until the last minute, but they love to do that. You know, deadlines on Wednesday. They don't always have to leave things to the last minute to approve things. I believe a decision's already been made. Yeah, and in fact, if a decision doesn't come out by Monday, if a decision isn't made on Monday, I honestly think that they're going to reject it. They're not going to approve it. I'd be very surprised if they do approve it. That's just my opinion. Because they know in it. Okay, welcome back. Block 101, home of value investing in disruptive innovation and tech. Pel Cullen inside. And this is a week in review. My top 7 stories for the week ending 7th of January 2024. Yeah, new year, first week of the new year. Okay, so yeah, I'm just going to run through my top 7 stories of the week and what I found most interesting. Okay, now there hasn't been that much stories this week, to be honest. Like, mostly it's been, analysts and people providing their predictions for the forthcoming year for 2024. Like, I've done my one already. I've done that on the 31st, although I published it on the 1st of January. So if you haven't checked it, then please check it out. I did my 2023 year in review, and then I spoke about the outlook for 2024 and gave some possible scenarios, one favorable and one that's not very favorable. But I forgot to mention in there, if if it wasn't obvious already, then yeah, interest rates. Okay, so if the Fed decide to keep interest rates high or stick with the current interest rates, which is around 5%, then yeah, expect the market to perform terribly. Yeah, that goes without saying. Whilst interest rates remain high, expect the market to move to the downside. Okay. The rally up to December or the end of the year was in hopes that the Fed will start cutting interest rates. So obviously, if they don't, then you can expect a correction to that. Okay. I will speak on the efficient market hypothesis as well. Like, that video is coming soon because it's very important. And it's very important because I see a lot of articles, I see a lot of people wondering whether or not certain events are priced in. Okay. In an efficient market, these events will be priced in. I will go into more detail on that in a future video. But yeah, let's kick this off, right? So, first story is obviously relating to interest rates. So, Fed officials said rates could remain high for some time. December meeting minutes appear to dampen prospects for future cuts to start in March, right? Most Federal Reserve officials wanted to keep borrowing costs high for some time, according to minutes of their meeting in December, adding to doubts that the US Central Bank is poised to begin cutting interest rates as early as March. While officials expressed optimism that the Fed was quelling inflation, they were also careful not to commit to any immediate loosening of monetary policy, according to a record of the meeting published on Wednesday. Fed officials surprised markets in December by indicating they expected to make 3 quarter-point cuts over the course of 2024. Ahead of the meeting, their projections were expected to hint at 2 cuts. However, the minutes suggested that those cuts were unlikely to come as soon as March, which many investors had bet on already. Okay. The dovish tone of the December meeting and Chair Jay Powell's comments immediately after it led many investors to bet that cuts could start as soon as the vote in mid-March. FOMC officials have warned since the meeting that a move to slash rates was far from a done deal, however. Which makes sense. They want to manage expectations, like that. The account highlights the challenges facing the Fed as it tries to call time on a campaign of aggressive rate rises without renouncing its commitment to keeping without renouncing its commitment to keeping price pressures under control and risking damage to its inflation fighting credentials. Headline CPI inflation is now 2.6%, with the 6-month annualized core rate, Fed officials' preferred measure of underlying price pressures, now just 1.9%. On Wednesday, Richmond Fed President Thomas Barkin, a voting member of the FOMC this year, warned that the quest to beat back inflation was not complete, saying that some companies did not yet want to back down from raising prices until their customers or competitors forced their hands. If that's the case, I fear more will have to happen on the demand side, whether organically or through Fed action, to convince price setters that the inflation era is over, adding that a soft landing was increasingly conceivable, but in no way inevitable. Yeah. On Wednesday, federal data showed that job openings in November fell to the lowest level in more than 2 years, offered some evidence of cooling in the labor market, bolstering expectations of rate cuts. December's decision from the central bank left the federal funds rate at 5.25% to 5.5%, a 22-year high. The FOMC's December projection showed most officials expected rates would end 2024 between 4.5% and 4.75%. Most officials expect rates to fall further in 2025, ending the year between 3.5% and 3.75%. Now, story 2. Fed revives investors' hopes of end to quantitative tightening. And this was just yesterday. Okay, so this is all commentary based on the December meeting minutes. Investors' hopes for a strong year for US Treasuries have been boosted by signals that the Federal Reserve could soon slow the wind down of its balance sheet. In the minutes of the central bank's December meeting published this week, some officials suggested the Fed review its policy of shrinking its balance sheet, known as quantitative tightening. A pivot from the Fed as it considers cutting rates from their current 22-year high of 5.25 to 5.5%, as we said, could bolster Treasuries' prices and reduce volatility in a market that has been unsettled by a deluge of supply. The central bank has in recent years been the biggest buyer of US government debt. After pumping trillions into the financial system to stabilize the economy at the start of the coronavirus pandemic, the Fed began slimming its balance sheet from $9 trillion in May 2022 to help contain the worst surge in inflation since the 1980s. Since ending its bond purchases, the size of its holdings of official sector debt has fallen to 7.2 trillion. Okay, so that's what, 1.8 trillion that they've wiped off. Now, with price pressures seemingly under control and rate cuts looming, the text of the minute shows some policymakers want a discussion on the circumstances under which those QT plans can be revised. So yeah, so you've got two stories there. You've got the Fed reviving investors' hopes of ending quantitative tightening, and you've also got, a Fed officials saying that interest rates could remain high for some time. So it's important. Yeah, I'm really not looking to make any moves really until March, let's say. Until March or the end of March, not just because of what the Fed's going to do, also because I will need to be able to analyze the data from the last quarter in it, so Q4. And the problem with Q4 is, you have the Christmas period, and that's the busiest period. So the volume of transactions may have increased. Again, people might have been buying in preparation for this year. They might not spend that much this year, in 2024. Okay, but yeah, I need to see the data that comes out, and I need to look at the company's performances for Q4 of 2023 before I even think about making any moves or, rebalancing my portfolio. So yeah, I won't be making any moves personally until the end of Q1 of 2024, until March time. Okay, next story, US venture capital fundraising hits a 6-year low. A 60% decline in 2023 from the year before sends a gloomy signal to funders and the startups that rely on them. I thought you was on mute. Funding by US venture capital firms hit a 6-year low in 2023, an ominous sign for startups with dwindling cash reserves and fledgling businesses reliant on such backing for survival. Globally, in 2023, venture investors raised the lowest level of capital since 2015. Sharp decline ratchets up pressure on startups, which have endured a funding drought over the past 18 months. VCs are reluctant to pour more cash into businesses they backed at the top of the market, while private tech valuations are falling as well. VCs have struggled to raise new funds as their own limited partners, institutional investors such as pension funds, insurers, and university endowments and foundations, pull back because of rising interest rates, which have made risky tech bets a costlier proposition. Understandable. As well as a reduction in investment from limited partners, US VCs are contending with a sharp slowdown in startup exits, such as initial public offerings, IPOs, or acquisitions, which is hampering their ability to return capital to their backers. The value created by startup exits in the US last year was just $61.5 billion compared to a 2021 peak of $797 billion, according to PitchBook and the MBCA. That's crazy. Late in 2023, a trickle of startups once valued at $1 billion or more started to collapse. Among them were trucking startup Convoy and healthcare company Olive, both valued at about $4 billion at their peaks. Electric scooter company Bird, once valued at $2.5 billion, also filed for bankruptcy in December. It's crazy, it's mad. Thanks to bumper fundraising years in 2021 and 2022, some venture firms have accumulated sizable funds which they have been reluctant to invest into a declining market. Similarly, some cash-rich startups have chosen to wait for more certainty before making their next move. Nick Schneider, the chief executive of $4.3 billion cybersecurity firm Arctic Wolf, said in an interview with the Financial Times that he would wait for as much clarity as possible on market conditions before launching a long-anticipated IPO. You know what? I do not know about Arctic Wolf, but cybersecurity is going to be so important moving forward in this, digital age, and in the, advancement of artificial intelligence. Cybersecurity, if you can get into cybersecurity, those assets will perform well, or should perform well. Okay, without a doubt. So I will be looking into Arctic Wolf. I will be looking into Arctic Wolf as well. But yeah, I found that article quite interesting. It's not surprising to me, but just, seeing the data and that, it makes sense. It's a tough time to raise capital for startups. Okay, next article. Coinbase Valuation rests on Bitcoin ETF approval. Crypto trading platform could struggle to hold on to its rich valuation this year. Coinbase was the financial dark horse of 2023. The crypto trading platforms, near 400% surge in stock price, trounced tech peers exceeding even Nvidia's 249% gain. Now, I gotta be honest, I'm not in coin. I don't hold any coin. I used to hold BNB, but I sold BNB. Like, this was long before what happened with CZ and Binance at the end of November. But yeah, these exchange tokens are a great bet, to be fair. Or these exchange assets, I would say. Yeah, not exchange tokens, but these exchange assets are a great bet. Much of that rise can be attributed to excitement about positive regulatory action. Speculation is rife that the US Securities and Exchange Commission will soon approve exchange-traded funds that invest in Bitcoin directly. Coinbase stands to benefit by acting as custodian of Bitcoins held by ETF funds. Yet even as investors pile into Coinbase shares and Bitcoin price rises, trading activity on the platform remains relatively subdued. The number of monthly transacting users stood at just 6.7 million at the end of the third quarter, down from 8.5 million a year ago. Trading volume slid by more than 50% over the period, while total transaction revenue was a fifth lower. Fourth quarter results during February should show an uptick, but this has already been baked into Coinbase's valuation. Despite 7 consecutive quarters of losses, the company trades on 16 times revenue, up from 1.6 times a year ago. Larger and more profitable exchange operators, CBOE and the London Stock Exchange, are on 5 times and 6 times respectively. Take from that what you will, that's quite telling, to be honest. A decision on regulatory approval for spot Bitcoin ETFs could be delayed. In the meantime, Coinbase is in its own fight with the SEC, accused of illegally running an unregistered securities exchange. It has failed to push the SEC to clarify whether digital assets are securities. Having enjoyed a surprising resurgence from a tumultuous 2022, Coinbase could struggle to hold onto its rich valuation this year. I would agree with that, to be fair. Made some great points. Okay. Next story is the SEC will approve a spot Bitcoin ETF as a political necessity, says TD Cowen. To us, this is a political necessity as the agency needs to cement its role as a crypto regulator before Congress consider broader crypto legislation. We also believe the agency does not want to lose a legal challenge to its refusal to approve Bitcoin ETFs. TD Cowen is among several analysts that are confident that the SEC will approve spot Bitcoin ETFs by next week. Last week, citing sources, Reuters reported that the SEC may notify whether the 14 firms vying to issue a spot Bitcoin ETF would have its approval or not as early as this week, ahead of a possible Jan 10th launch. Now, about that article, I find that article quite interesting because really it's whether or not this ETF will be approved. Do I believe that it's a political necessity? No, not really. And just given Gary Gensler's stance, he's very much against Bitcoin. Do you understand? He's very much against the current market. Well, I wouldn't say he's very much against Bitcoin. That's a lie. Yeah, he's never really said that. Okay, but he's very much against the existing environment. Okay, and the fraud and manipulation that takes place at present. Okay, so it's 50-50 whether or not he will even approve a spot Bitcoin ETF. Honestly, it could go either way. He might approve it, he might not. And the fact that, it's the 5th of December, it's the 5th of January, these people know what decision they've made already. Do you know what I mean? And if it was going to be approved, I believe that they would have done so, already. They don't have to always leave things until the last minute, but they love to do that. You know, deadlines on Wednesday. They don't always have to leave things to the last minute to approve things. I believe a decision's already been made. Yeah, and the fact, if a decision doesn't come out by Monday, if a decision isn't made on Monday, I honestly think that they're going to reject it. They're not going to approve it. I'd be very surprised if they do approve it. That's just my opinion. Because they know in it. And why would you do it mid-market, middle of the week? Like, no. See, you put it on the weekend and you announce on the 8th. Yeah, you announce on Monday when market's open. So, yeah. But I found that quite interesting as well, to be fair. I don't believe it's a political necessity. And the thing with the Bitcoin ETF, which I failed to mention in the last video in my 2024 outlook, like, MicroStrategy has been running a pseudo ETF for how long? You know, for at least a year now. Do you know what I mean? Like, that company's stock is primarily Bitcoin. That's all they do. They buy Bitcoin. So if you wanted exposure to Bitcoin, you could have simply bought MicroStrategy. Do you understand? MicroStrategy. And it's evident because MicroStrategy's, you know, stock is up, what, over 200% this year, I believe, or in 2023. Yeah, so I don't see investors running to this Bitcoin ETF. If you wanted to front run it, you just buy MicroStrategy. I think, again, buy the rumor, sell the news event. I don't see it having the effect that many of these crypto cheerleaders or Bitcoin cheerleaders expect. I simply don't believe the demand is there for a Bitcoin ETF. So on both accounts, you've got a lack of demand in the Bitcoin ETF, and you've also got the potential for SEC to reject a Bitcoin ETF entirely, or push it back or delay it from January the 10th, from giving a decision on January the 10th. So in both of those scenarios, you know, you could expect a move to the downside, which will hurt a lot of people. But yeah, I'm not going to be short selling, but that's just my opinion. But that's not financial advice. Let me just say that. Okay, next story. Binance places monitoring tag on 10 crypto assets, including Monero and Zcash. Yeah, tokens with the monitoring tag exhibit notably higher volatility and risks compared to other listed tokens, Binance said. These tokens are closely monitored with regular reviews conducted. Keep in mind that tokens with the monitoring tag are at risk of no longer meeting our listing criteria and being delisted from the platform. Here, and these are mainly like privacy coins, to be fair. Binance added that users must pass corresponding quizzes every 90 days to gain trading access to these tokens labeled with the monitoring tag. I didn't even know that. I'll be honest, I didn't even know that. But I don't hold any of those tokens. To be fair, I don't hold any of those assets. The monitoring tag has been placed on FIRO along with other privacy coins due to increased regulatory pressure, including from MiCA, recent initiatives from US regulators, and compliance to Binance's settlement with the US Department of Justice. However, we have been in active discussions with Binance on this matter since September 2023, and thus far our proposal to implement exchange addresses has been received positively. We welcome the active dialogue with Binance and their openness to working together to find a mutually beneficial solution, and are confident that exchange addresses balances exchange compliance requirements without sacrificing user privacy. Yeah, I think time is running up for these privacy tokens. Yeah, it's just not going to run with the government having privacy coins like that. Yeah, so It's not financial advice, but you know, I would very much. This is not financial advice, okay? This is not financial advice, but I would very much look to exit or close my positions out in these assets, these privacy coins. Okay, as long as I'm in profit. Okay, as long as I'm in profit. Next story. Apple's 85 billion a year services business faces legal reckoning. Now, this story I found quite interesting, to be honest. Apple faces a legal reckoning in 2024 with a series of regulatory decisions by US and EU authorities over the coming months set to determine the future of its 85 billion a year service business. The biggest hit to the iPhone maker could come from a US antitrust trial against Google, where it emerged that the fellow tech giant had paid more than $26 billion in 2021 to make its search engine the default on Apple's devices and other smartphones and browsers. Should Google lose a case, it could be forced to stop making regular payments to Apple, which Eric Soffer, an independent analyst, I hope I said his name right, estimates as being worth over a quarter of annual revenues earned by Apple's services arm. That is ridiculous. That's crazy. Meanwhile, Apple and other tech giants face increasing scrutiny from the Biden administration. Is it Biden? The president. Yeah. Over concerns. Sorry, the current president as at 2024, because, it might change by the end of the year. Over concerns about the dominance of its app store, which it is already being forced to change in the EU due to legislation designed to rein in the power of big tech. Together, the legal and regulatory actions spanning two of Apple's biggest markets represent the biggest threat to the company's business in years. Its services arm, which includes income from the App Store, video streaming arm, and Apple Music, has steadily increased as a proportion of the company's total revenues, which is still dominated by sales of devices such as the iPhone. The Google trial, seen as the most significant antitrust monopoly trial in more than 25 years in Washington, will hear closing arguments in May. Should Google lose, it will almost certainly file an appeal, but such a decision would raise questions about how the two tech giants work with one another into the future. The White House is at the same time intensifying its efforts to tackle what it regards as excessive corporate power. Jonathan Kanter, head of the Department of Justice's antitrust unit since November 2021, has made no secrets of his ambition to bring cases against the biggest US companies. His department has been probing Apple's App Store policies for years and is now, according to Kanter, firing on all cylinders. The window for him to bring a case is closing, however, as the US presidential election and the potential change in administration loom. Final article. Apple, the world's most valuable stock, is about to start growing again. Opinion piece by Lex. Both worries should be tempered. Regulatory decisions are not imminent, and there is a good chance growth will return in 2024. Overall, smartphone sales fell last year, but the premium market grew 6%, according to data from Counterpoint Research. This is a market in which Apple dominates with 71% of the global total. Last year, it opted not to raise prices for its new model. This year, it should give status-seeking buyers the chance to stretch their credit cards. The average iPhone selling price will rise. Raising this will bump revenues up even if sales volume declines. Other new products expected this year include the Vision Pro virtual reality headset, a new iPad, and the possible introduction of generative AI software integrated into Apple devices. The company may have missed out on the early flush of AI hype, but it has also avoided rushing out a subpar product that might harm its reputation. But the real reason to think the stock can continue to trade at a forecast earnings multiple twice as high as the 10-year average is the balance sheet. At the last count, Apple had $162 billion in cash and marketable securities, if it spends the same proportion of this on dividends and buybacks as it did last year, then investors can expect to receive a hefty 89 billion in 2024. Okay. And I think that's quite important. Like, I don't really see the Vision Pro headset doing well, to be fair. Like, I haven't spoken to anyone who's vaguely interested in the Vision Pro reality headset or purchasing it. Okay, and these people do have money, like that. They're not interested in that. So the only way I can see that working is like business to business, not business to customer. I don't see people investing in the Vision Pro VR headset at all. Like, the most people that I see use VR headsets are gamers. Do you understand? And they've got PSVR 2. So yeah, I don't see the Vision Pro virtual reality headset doing much for Apple. The generative AI software, though, integration, I do believe will reap benefits for Apple. They're always late to market, though. They see what happens with other people. They use other people as their guinea pigs, and then they just copy and Applefy it. Yeah, they ship their own version of it, which is understandable because they've got a lot to lose. They've got a lot more to lose than startups and other companies who are trying to gain market share. They want to protect market share as much as possible. Okay, when you have assets worth protecting, you're more risk adverse. I've spoke about this in another video. But yeah, definitely with the balance sheet, let's say, what would happen from a financial perspective is that when you do a corporate buyback, and these companies have been doing a lot of buybacks, okay, what happens is you increase the earnings per share, and that's how your valuation stays high. This is the trick that they use, okay, through these corporate buybacks. Yeah, Apple don't need to have people's money. They don't need loans or anything. They've got 162 billion on the balance sheet. You know what I'm saying? In cash and marketable securities. Yeah, they're not crying out for money. They're not begging for money like that. Do you understand? So to keep their valuations high, they will do buybacks. Okay? They will do buybacks because it increases the earnings per share to existing holders or the remaining investors. I'll probably do a separate video on stock buybacks, on share repurchases, because it's a deeper topic, innit? But in general, a lot of investors use earnings per share as a primary ratio or primary metric or key performance indicator of a company's stock. And one of the advantages of a stock buyback or a share repurchase is that it creates a level of support. So say, for instance, if you're in a declining market, as we have been in, a share purchase or a share buyback, a stock buyback, will create a level of support so that the asset price doesn't drop any further. And Apple's been doing buybacks for time. Like, they've been doing it for a while now. But some of the criticisms of a stock buyback is that it basically artificially improves financial results as well. And companies do tend to abuse it. And again, Apple can afford to do this. They've got 160 billion plus in cash and marketable securities. Do you understand? Like, what? Microsoft spent 13 billion on AI in the previous year. So don't think that just because of this stock repurchase that Apple aren't investing in research and development or investing in other opportunities as well. Do you know what I mean? They've just got the money to do it. They've got 162 billion. Although I must say, this regulatory action against them and the potential to lose 25 billion in revenue per year from Google is a major blow. It's a big issue. But again, like I said, I will go into this in more detail in another video because, like I said, it's a separate topic. It's a separate issue. And, when you think of in the crypto industry, when you see coin burns happen, coin burns are essentially like stock repurchases because it takes coins out of circulation. So it increases the value per coin. Okay, it artificially inflates the price. it manipulates the price of the coin because there's less coins in circulation. Yeah, so they're kind of like equivalent. But again, I will do another video on that separately. But yeah, like I said, it's been a slow week for news. Most people have just been providing their 2024 predictions. I have given mine already. As I've said, I will be waiting until the Q4 performance results or financial results are out before I make any major moves within the market or reevaluate my portfolio or position. So yeah, I hope you found this video valuable, or I hope you found something from this video valuable. If you did, remember to hit the like button, hit the notification bell, and subscribe to keep up to date with new videos and new content that I will be pushing out. I will be doing this every week. As I said, a market update, my 7 top stories, if there are 7 top stories of the week or events. So yeah, Pal Colin, Block 101, home of value investing in disruptive innovation and tech. Until next time, see you next week.